Hey, what's up, everyone? Kirk here again, Option Alpha. And today I want to answer a member question, which is all about, asking if we do any investment criteria, research, analyst reports, anything like that when we do an options trade in a particular stock. The simple answer to this is no, we don't do a lot of stuff. We don't look at balance sheet. We don't look at financials. I don't even think anybody looking at balance sheets or financials could really have a real strong understanding of where a company is without being an analyst in that space. And I was an analyst in the REIT space, so I have an understanding of balance sheets and financials and all that stuff, but in particular to REITs and real estate investment trusts, right? So I think even looking at that stuff doesn't really give you a good indication of, where the stock may or may not go. I'll use the perfect example of this today, which is why I'm doing this thing. This question in Facebook Live is because of Facebook. So if you look at Facebook stock today, it's down huge today because of all this data breach stuff or data issues that they're having right now. How many people could have predicted that, right? Could you raise your hand right now and say you would have absolutely predicted it? It could have been in their financials, in there. Somebody forecasted it. An analyst said it was coming today. Like everyone knew it was going to happen. It was just a matter of the announcement. Like, no one could have predicted that was going to happen, right? So when you're making trades on such a shorter time period, like 30 to 60 days, like in that time period, financials have nothing to do. I mean, they really don't have anything to do with it. And things can happen literally out of the blue, like what happened in Facebook, and totally change the dynamic of the trade. What you thought was a good trade, and you checked all the analyst reports and the earnings and everything, and you thought it was a, like rock solid buy or rock solid, sell, like nobody could have predicted that was going to happen, right? So why do we try? Like, why do we try to do these? And it's because most people are insecure with just making an assumption and then losing. They want to have some sort of like fallback. So they want to double check this and triple check that and triple check it. But the reality is that some trades just aren't going to go well, right? And so you can't do anything about it. But what you can do with options, I think, is just the frequent readjustments, right? So what I love about options trading is that you can make a trade, right, at like some price point level. And then if the stock goes down, 30 days later, you make another trade. And then if the stock continues to go lower, you make another trade and another and another and another. Or if the stock goes the opposite direction, it starts going higher and higher and higher, you just keep trading and just averaging up or averaging down. That's why I often talk about market direction being meaningless when it comes to trading, right? So when you make trades in options, market direction is meaningless the more frequent and the shorter duration that you have. Now, that doesn't mean that you should trade 1 day out, right? It doesn't mean you should trade 100 days out. But generally, the more frequent you can trade and the shorter duration you have, the more opportunities you have to reset your pricing. That's why a lot of these high-frequency shops that do millions of trades every single day and just like scalp pennies are always neutral. Like they always end the day neutral because they're trading so much and so often. If the market goes up by 100 points, so what? They might have lost on 2 or 3 trades initially or 5 trades as the market's going up, but then they average up. And now the market's at a newer, higher price point, so they kind of bracket everything around that price point. So that's why I don't ever check, to get back to the member question, like I don't ever check any of that stuff. I mean, like the only thing I'll probably ever check are dividends and maybe earnings, just to know it's on the calendar, right? Like I'll know when earnings are expected. It's pretty obvious when they're generally expected most of the time, but I'll double check. And then dividends, like if there's a dividend that might impact whether I do a short, contract, a short call at the money or out of the money, right? That might impact that a little bit. But otherwise, there's nothing you can gain from looking at those financials. So stop wasting your time, kind of digging through those unless there's some major event and the stock's moving, right? So I don't know. I think Facebook is a great example of this today. So thanks, Facebook, for having a huge data breach or whatever it even happened to. Like, I don't even know. I know it was like a data breach or something. So who knows? Cody said, I'm new to options, just got options on Robinhood. Be careful because I think you can only do buys and sells and covered calls. So just be careful how you do it. So just go about it carefully. I still have not gotten the approval to do it on Robinhood yet. So we'll see. Great. Thanks. Love it. And I like that you like the podcast. Let me know if you have any other questions. Again, if you guys want to get your question answered here on Facebook Live, because we are doing a lot of these member Q&As, or on our daily podcast, just let me know. Add your question right below in the comment section, or give me some love if you think this has been helpful. So we'll see what happens. So we'll talk to you guys soon. Take care.